You are about to find out the key levels on Delta Airlines ticker DAL. Now, they did just have their earnings. As you can see, they came out at an earnings per share of $2.68. Now, this is one of their best performing quarters ever. And not only that, I mean, even compare it to their previous quarter. They literally did 25 cents earnings per share. So massive difference today. And you would normally take this as really good news. So why... Firstly, did we gap and then kind of give away all that gains, and even now we're down on the day. So this is to do where we are basically from the chart perspective, because going into this, and again, you can go back, we uploaded a video on Delta, I think end of last week, maybe early this week, and we were talking about how overextended it is. So when we were coming into earnings, we were looking at this bearishly, and the reason for that was where we're sitting. So what you can see here is where we currently are is at our second deviation. This is cool. This is considered very overbought. If you're at the third deviation, that's extremely overbought. You never really tend to see stocks trade above that level, and if it is, it tends to be short-lived. So considering we were at this overbought area, we knew coming into earnings, if they were good, we weren't going to move up much. If they were in line or bad, we were going to sell off, and we were going to sell off hard. And that's why I like these kind of opportunities, because you kind of get an insight into the earnings knowing, okay, we play one direction, we'll play the downside. If it doesn't come out in line or bad, it will go against us, but you're not going to lose much of the options, because again, it's not going to fly. Or even if you're trading the shares, it's most likely not going to move a big percentage, because again, it is already extremely overbought. People still don't want to be buying off these good earnings. So that's that key range, and again, how we justify these levels is using standard deviation channels. Again, this just uses standard deviation if you already know what that is. But again, overbought area, so we kind of knew we were much more likely to sell off than there any chance of being an upward move. So that's what we're looking at. Now, anyway, we can see we did gap up a bit. We gapped up to 49.80. Now, if we can continue up, and again, there's always that possibility that we do, even though we do look weak from an intraday perspective, if we do end up pushing up, whether that's today, later this week, or maybe even next week, what we're really looking at is a move to 51.50 to around 52.50. Now, what this is our third deviation between the 6 month and the 1 year. These are extremely overbought levels. So if we start coming into here, really looking at it short bias, again, will probably be a swing trading opportunity. Can day trade it, but swing trading, there's so much money on the table if we play the downside, especially if we get some sort of defined risk. There can be a lot of opportunity to play the downside on this stock. And again, I would have targets of $48. And if you want to play an even further target, around $44. So that's how I'm looking at Delta. That's that key level if we continue up, looking to play the downside into the key levels below. And again, I wouldn't be too bullish on this. Yes, the earnings were great. Yes, we are already, pretty high up on the stock. We're doing quite well. Airlines are doing quite well, but they are extremely overbought now. So if you're trading the upside, don't think there's much opportunity to there, or there's not a massive reward if you play the upside. Whereas if you play the downside, again, there's a lot more opportunity, or at least I would say reward, compared to the risk that you'll be taking. Again, we could have stops above on Delta, probably $55. If it goes past that, then cool, we could stop out, or again, use some sort of defined risk so we don't have to get stopped out. That's why I like playing vertical spreads or covered stock. So even if it temporarily kind of kicks us out, we don't have to actually get out the trade. If it popped up to $60, in which again probably we would not see, but if we did, we wouldn't have to get kicked out of the trade. We could sit through that, because again, our risk is defined. We know how much we're going to lose. We're not going to lose more if it continues to fly. So that's what I'd be looking at. Again, I'm being patient, looking to short that range of the $51, $52, looking to target 48 and 44 on the downside. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.